In this section, we will analyze the current mixed signals of term deposit yields in the Philippines and what they imply for the future direction of BSP's monetary policy. Term deposits are bank accounts that offer a fixed interest rate for a specified period of time, usually ranging from 1 month to 5 years. They are popular among savers who want to earn higher returns than regular savings accounts and have a low-risk appetite. According to the latest data from the Bangko Sentral ng Pilipinas, BSP, the average interest rate for short-term term deposits, 1 year and below, was 3.751% in December 2022, while the average rate for long-term term deposits, above 1 year, was 5.402%. These rates were significantly higher than the rates in January 2022, which were 0.412% and 1.526%, respectively. This means that term deposit yields have increased sharply over the past year, reflecting the rising inflation and market expectations of further policy tightening by the BSP. However, not all term deposit yields have moved in the same direction. While the rates for longer-term deposits have risen steadily, the rates for shorter-term deposits have fluctuated and even declined in some months. For example, the average rate for 91-day term deposits dropped from 4.774% in March 2022 to 4.262% in April 2022, before rebounding to 5.504% in May 2022. This suggests that there is some uncertainty and volatility in the market sentiment regarding the BSP's policy stance. One possible reason for this divergence is that shorter-term term deposits are more sensitive to changes in the BSP's policy rate, which is currently at 4.5% after 4 consecutive hikes of 25 basis points each since September 2022. The BSP has raised its policy rate to curb inflation, which hit a 3-year high of 6.7% in November 2022 due to supply shocks and strong demand amid the economic recovery from the pandemic. The BSP has signaled that it is ready to adjust its policy settings further if needed to anchor inflation expectations and support growth. On the other hand, longer-term term deposits are more influenced by other factors, such as global market conditions, sovereign credit ratings, and fiscal outlook. The Philippines has faced some external headwinds, such as the resurgence of COVID-19 cases in some countries, the tapering of quantitative easing by major central banks, and the rising geopolitical tensions in the region. These factors have increased the risk premium and borrowing costs for emerging markets like the Philippines, putting upward pressure on long-term interest rates. Another possible reason for the divergence is that longer-term term deposits offer a higher return than shorter-term ones, making them more attractive for investors who are willing to lock up their funds for a longer period. According to MoneyMax, a financial comparison website, term deposits can earn as much as 5% depending on the term and deposit amount, while most savings accounts yield less than 1% interest. Therefore, some savers may prefer to invest in long-term term deposits to take advantage of the higher interest rates and hedge against inflation. In summary, term deposit yields in the Philippines have shown mixed signals over the past year, with longer-term yields rising steadily and shorter-term yields fluctuating and sometimes falling. This reflects the different factors that affect term deposit rates, such as inflation, monetary policy, global market conditions, and investor preferences. The mixed signals also imply that there is some uncertainty and volatility in the market expectations of the BSP's future policy actions. The BSP will likely continue to monitor the inflation and growth dynamics closely and calibrate its policy response accordingly. Term deposit yields are attractive for investors who want to earn higher interest rates than regular savings accounts. However, term deposits also come with risks and uncertainties, especially in a volatile economic environment. Here are some tips and strategies for investors who want to take advantage of the term deposit yields while minimizing the risks and uncertainties. Compare different term deposit products from various banks. Term deposits vary in terms of interest rates, maturity periods, minimum deposit amounts, and fees. You can use online tools or visit bank websites to compare different term deposit products and find the best one that suits your needs and preferences. Choose a term deposit that matches your investment horizon and liquidity needs. Term deposits are fixed income instruments that lock your money for a certain period of time. If you withdraw your money before maturity, you may incur penalties or lose interest earnings. Therefore, you should choose a term deposit that matches your investment horizon and liquidity needs. For example, if you need your money in 6 months, you should not invest in a 1-year term deposit. Likewise, if you have a long-term goal, you should not invest in a short-term term deposit that requires frequent rollovers. Diversify your term deposit portfolio. Term deposits are subject to interest rate risk, which means that their value may decrease when interest rates rise. To reduce this risk, you can diversify your term deposit portfolio by investing in different maturities, currencies, and banks. This way, you can balance your exposure to different interest rate scenarios and benefit from the best rates available in the market. Monitor the economic and monetary conditions. Term deposits are influenced by the economic and monetary conditions of the country. For example, when inflation is high or expected to rise, the BSP may increase its policy rates to curb inflationary pressures. This may lead to higher term deposit yields in the market. Conversely, when inflation is low or expected to fall, the BSP may lower its policy rates to stimulate economic growth. This may lead to lower term deposit yields in the market. Therefore, you should monitor the economic and monetary conditions of the country and adjust your term deposit strategy accordingly. Seek professional advice if needed. Term deposits are simple and straightforward investments, but they may not be suitable for everyone. Depending on your financial situation, goals, risk appetite, and tax implications, you may need professional advice to help you make informed decisions about your term deposit investments. You can consult a financial planner, an investment advisor, or a tax consultant to guide you on how to optimize your term deposit portfolio.